Morning, ladies and gentlemen. Welcome to Vietcombank fourth quarter earnings call. We appreciate your participation and your continued interest in Vietnam and also Vietcombank. For today's call, we are honored to have Mr. Do Việt Hùng, BOD members, to deliver opening remarks with brief overview on the fourth quarter results and strategic focus. Next will be the macroeconomics update with Mr. Nguyễn Thắng, Chief Economist, and finally, financial reviews by Mr. Dương Đức Hiếu, IR Managers. The Q&A sessions will follow, and I believe that investors have received a QR code to submit questions in advance in our invitation letters.
Good morning, ladies and gentlemen. My name is Hùng Do. I'm the member of the board of directors of Vietcombank. So on behalf of Vietcombank's board of directors and the executive management, I would like to welcome all investors, shareholders, analysts to our briefing on Vietcombank business performance for the fourth quarter and the full year of 2025. First and foremost, thank you for the continued interest in Vietcombank and for the trust you have placed in our long-term strategy. The support and constructive engagement are important to us as we continue to strengthen Vietcombank's position as the Vietnam leading bank. At Vietcombank, we remain firmly committed to transparency, timely disclosure, and the protection of shareholders' rights. Today's session reflects our ongoing efforts to provide the market with clear, consistent, and comprehensive information, as well as an open platform for dialogue with our stakeholders. In 2025, despite global uncertainty, Vietnam maintained strong momentum, with GDP growth reaching 8.02% for the full year. FDI continued to be a key driver, reflecting sustained confidence from international investors in Vietnam fundamentals and long-term outlook, with registered FDI exceeding $38 billion, while disbursed FDI reached around $27.6 billion. Credit demand also strengthens, with system-wide credit growth reaching nearly 18%, supporting economic activity and business expansion. This backdrop, Vietcombank delivered another year of solid and disciplined performance in 2025. For the full year, profit before tax reached 44.02 trillion Vietnamese dong, underpinned by resilient core banking income and prudent balance sheet management. Both credit growth and customer deposit growth increased during the year, reaching 15.3% and 10.5% respectively, providing a strong foundation for business momentum. On the other hand, asset quality remained among the strongest in the system, with the NPL ratio at 0.97%, while our provision buffer stayed robust, with a loan loss coverage ratio of 154% and improved capital strength, with CAR ratio at 11.7%, reinforcing our capacity to support sustainable growth and resilience going into 2026. To provide deeper insights into the macroeconomic environment and our performance, colleagues from Vietcombank Research and Investor Relations teams will walk you through the presentation. We will then open the floor for question and discussion with our esteemed shareholders and investors. With that, I would like to hand it over to Mr. Nguyễn Thắng, Chief Economist, to share our views on macroeconomic performance. Thank you. Mr. Thắng, please.
Okay, thank you very much, Mr. Do Việt Hùng. Yes, I think that you already know that in 2025, the State Bank of Vietnam, which is loosened monetary policy, and credit grew at approximately 19%, But this year, in 2026, the State Bank of Vietnam actually took a more cautious approach to the lending to the credit, management. Actually, it's set limit, the ceiling to just 15%. So that's much lower than last year, 19%. And this reflected the more cautious approach of State Bank of Vietnam, given the fact that credit per GDP in Vietnam almost reached 150%, which is very high by international standards. That justifies the new approach of the State Bank of Vietnam to credit limit. And State Bank of Vietnam recently also announced a number of requirements. The first one is that for the first 3 months of this year, that is in the first quarter, credit should not grow in excess of 25%, a full year credit growth limit quota, in order to avoid early overheating in the lending. Importantly, the State Bank of Vietnam requires that rate of outstanding real estate loans must not exceed the bank overall credit growth compared to the end of 2025. So this reflects, I mentioned earlier, this more cautious and prudent approaches State Bank of Vietnam in order to contain credit to high-risk sectors. And we hope that this year the real estate market will cool down a bit. Thank you.
Thanks, Mr. Tang, for the macro update. Now let's discuss the firm performance in the fourth quarters of 2025, which is another solid quarters for the firm. Starting with our loan book, which is a key item in our balance sheet and made up around 83% of our interest income. In Q4, loan growth continued its momentum from Q2 with strong recovery from most segments. The firm ended the year with loan of 1,674 trillion, up 15.5% year to date, slightly higher than growth of 2024, of 14.1%, and in line with the market recovery. The loan growth was driven by corporate segment, particularly with disbursement from medium and long-term projects, while retail segment gained momentum during the second half. If we include loans transferred to our VCB Neo, actually credit growth were well above sector's average. Going deeper into our loan mix, corporate loans accounting for 49% of the loan book, it was driven by all three customer segmentations. FDI loans recorded above average growth of 17%, focusing on sectors such as electronic products, animal raisings, oil refinery, and textiles. Large corporation segments saw continued disbursement from major projects, while mid-sized corporation loan posted growth of 20% year to date, confirming economy's bounce. Individual loans accounting for 45% of the total loan was up 18.5% year to date, mainly driven by mortgages with growth of 20% year to date. Business loan continued to be flat and ended the year with growth of around 9% year to date. In the meantime, consumption loans remain robust, with growth of 30% year to date, thanks to the recovery of domestic consumption. On asset quality side, asset quality continued to be well managed, with NPL among the lowest in the market, while coverage maintained nearly double industry average. Our NPL ratio continued to stay low. With the NPL low, the firm was able to make provision in Q4 of roughly 845 billion and ended the year with cumulative provision expense of around 3,185 billion. The low provision expense translated to our low credit cost at 0.2% as end of 2025, and coverage ratio of roughly 174%, which nearly double of sector's average. For NPL breakdown, NPL ratio of retail loans continued to be low at 0.7%, while NPL ratio for corporate loan has been stable at 1.3%. Moving to our funding side, deposit continued to grow at our target rate, and NIM started to take up thanks to better loan mix. The firm ended the quarters with deposit of 1,672 trillion, up 10.4% year to date. CASA proportion slightly improved to 33.7% and continued to stay above the sector's average. And as our loan mix continued to shift toward long-term loans, with medium and long-term loans proportion increased strongly in Q4, accounting for 41% of total loans. This is the third consecutive quarters the growth of medium and long-term loan growth outpaced the growth of short-term loan. With a positive shift, loan yield ticked up to 5.9% from 5.6% in Q2, and asset yield was stable at 4.7%. Cost of fund was down to 2.3% from 2.4% in Q3, thanks to improvement in CASA. We ended the year with NIM of roughly 2.7%, an improvement compared with Q2 and Q3 this year. Now let's deep dive into our income structures. PBT continued to beat the whole year guidance with strong asset qualities, left headroom for non-interest income headwind. NNI of 58.6 trillion, up 6% year over year, given strong credit expansion and recovered NIM. Q4 saw the most visible impact of Q4 impact as Q4 NI up by 10% Q on Q. In terms of NFI, it was around 10 trillion, down 6.6% year over year, mostly due to the fact that the upfront fee from bancassurance was completed in 2024, and there was no upfront in 2025. Excluding such impact, NFI up by 11% year with flat fee income, while FX and trading income experienced strong growth, which partially offset the absence of upfront fee. With FX growth of 16% year over year and trading income growth of 166%. Other income of roughly 3.6 trillion, up 51% year over year, thanks to strong momentum since Q2 from bad debt collection and no further impact of one-off expense. TOI of 72.4 trillion, up 5.5% year over year, thanks to stronger NII and resilient other income. OPEX of 25.2 trillion, up 9% year over year, driven by a 11% increase in staff cost and 3% increase in admin cost. Provision of 3.2 trillion, which was in line with the full year guidance, and all of those resulted in PBT of 44 trillion, up 4% year over year, higher than the shareholder target of 3.5%. And now let's discuss more about our non-interest income and OPEX structures. For non-interest income, the firm ended the year with non-interest income of 13.7 trillion. Non-interest income was driven by three drivers, with FX income being the largest, accounting for 45% of non-interest income, followed by other non-interest income of 26% and fee income of 25%. FX income ended the year with growth of 16% year over year, thanks to favorable market conditions and efforts to diversify FX products, with a particular focus on derivatives such as forward and swap. Other non-interest income of 51% year over year, mainly thanks to the strong debt collection in the last 3 quarters of 2025. Fee income was down by 32%, but stayed flat if we excluding the impact of upfront fee. Main contribution coming from e-banking, domestic payment, and card services. Bancassurance still declined year on year, but in Q4 we saw some improvement, and we managed to keep our position as number 4 in the market by FYP. Operating expenses, we ended the year with OPEX of 25.2 trillion. OPEX structure remains stable with staff cost being the largest component, accounting for 54%, followed by administrative expenses of 24%, expenses on asset of 13% and other expenses of 7%. Staff cost was the main driver for OPEX, with growth of 11% year-to-date. Despite a lower number of employees, which was down 4% year-on-year, and we maintained competitive salary package to retain talent, particularly in the IT and data. Admin cost was well controlled and increased by only 3%. Next on we want to give you a snapshot on our ESG journey in 2025 by numbers and our latest progress. In terms of environment, our green loan posted 43 trillion at the end of 2025. Also in 2025, we issued sustainability-linked bond worth of 2 trillion to further support our ESG commitment. In terms of socials, we continuously enhance digital offering to our customers on digital channel with aim of making banking service available to anyone in anywhere in Vietnam. Our social security contribution stood at roughly 462 billion in 2025. In terms of governance, in October 2025, we were the only bank named among top 10 strongest brands in Vietnam by the Vietnam Economic Times. In January 2026, our long-term ratings affirmed by Moody's at BA2, while baseline credit assessment was upgraded to BA2, showing the bank's strong standalone financial profile. Finally, let's take another look at our key ratio for qualities and profitabilities. In terms of qualities, our LDR of 100%, our coverage ratio of 174%, NPL ratio of 0.97%, CAR of 11.7%, credit cost of 0.2%. Profitabilities, PBT of 44 trillion, NIM of 2.7%, net interest income proportion of 19%, ROA of 1.6%, ROE of 16.6%, and CAR of 13.8%. So to wrap up, we are pleased with another year of strong operating performance. The future is obviously unusually uncertain, but no matter what outcome will be, we are excited to do our part to continue the support of our clients and the market and the broader economy. And we believe the banking system will be a source of strength in this dynamic environment. And with that, we are now happy to take your questions. So let's open the floor for Q&A. Thank you.
Thank you all for your presentation, and thanks to the audience for your attention to our remarks and presentations. We will now move to the Q&A session. We will first address questions sent to us during the registrations. The first question is for Mr. Tang. Could the bank provide an assessment of the banking industry outlook in 2026? And what is your view on the more cautious approach taken by the SPV recently?
Yes, thank you very much. I think that this year's situation is quite unique in the sense that on the one hand, the State Bank of Vietnam continue to provide a kind of support to the high growth rates in Vietnam, because as you know that the government of Vietnam already set a very ambitious target of growing by at least 10%. So it is quite important to provide sufficient liquidity into the system in order to support this ambitious growth rate. On the other hand, I mentioned earlier that the State Bank of Vietnam also wanted to be more cautious because credit to the GDP ratio in Vietnam is already high at roughly 150%. So I think that the State Bank of Vietnam will strike a kind of right balance between, how can I say, supporting growth and ensuring macroeconomic stability. So in general, I think that this year the interest rates will continue. Will continue to be at a high level for a number of reasons. So the first one I already mentioned earlier, that this is a high growth rate requires more liquidity in the system. Number two is that this year there will be a number of mega projects in public investment and in real estate being implemented and continue to be accelerated. For example, regarding public investment, this year the government of Vietnam already made a plan of making approximately 1.1 trillion Vietnamese dong in public investment in mega project, increased by this is increased by 65,000 billion dong, or roughly 1.28% of GDP. So this is quite substantially increase in public investment. Number two, there are also a number of mega projects in real estate being implemented by big corporations. So these things actually grow out some of the investment in the production sectors. So we expect that the increase in the interest rates might cool down a bit after the Lunar New Year's festival, thanks to seasonality. But the other things that actually can keep interest rate at a higher levels at 2025. In 2025 is a number of more structural factors that I mentioned earlier. So this is my, how can I say, view of the situations in the banking system regarding the credit and interest rate. Actually, deposit interest rate in state-owned commercial banks already increased by 0.1 percentage points, and in the private commercial bank, the increase was larger than that. But we would expect that this increase will cool down a bit after the New Year festival because of seasonality. Thank you.
Thank you very much. Mr. Tang, can you kindly also share your view on the interest rate and the FX outlook in 2026?
I already mentioned earlier about the interest rate, which was linked to the how can I say, regulations that the how can I say, related to credit management. Regarding the forex, I think that this year is there are, how can I say, opposing forces that influence exchange rate in 2026. So first one is that that the Fed is already embarked on, how can I say, rate reduction trajectory cycle, and the market widely expects that the Fed will reduce Fed fund rate twice this year. So it will reduce the pressures on Vietnamese dong against US dollars, because the SY is expected to be stable at quite low level at roughly 97, 98. And and we know that in last year, the State Bank of Vietnam already did a very good job in terms of stabilizing the forex market through a number of instruments such as forward sale of foreign exchange and foreign exchange swap. And we expect that this year the trade balance continue to be positive. So these forces will reduce pressures on the Vietnamese dong against dollars. But on the other hand, there are also the opposing forces, that is because of strong growth, the demand for forex will be will increase, and particularly public investment, because we need to import quite a lot. With some estimates that roughly 50% of inputs into public investment project have to be imported from overseas. So there are also pressures on the exchange rate of dong against dollar. But on balance, we do. Our opinion is that the exchange rate of Vietnamese dong against dollar will appreciate approximately 3% likely in 2025, because in 2025 the forex, the exchange rate of Vietnamese dong against dollar depreciated by approximately 3.2% in interbank market, and slightly more than 4% is free market. So this year we also expect the same level of depreciation.
Thank you very much. Now we're gonna head into discussing Vietcombank 2026 outlook. Mr. Hùng, can you please share what is the Vietcombank guidance for this year business performance, and also what is the profit before tax target in 2026?
Thank you for the question. Taking into account the macro backdrop mentioned earlier by Mr. Thắng. So now we are working on key figures of our business plan in terms of growth, quality, and profitability. For the credit growth, we are still waiting for the Central Bank, the State Bank of Vietnam, for official quota granted to Vietcombank. You may know that so far there are some banks in the market already have a credit quota, but because the Vietcombank now we are one of the 4 banks to assist in restructuring with banks, and so because that the SBV need more time to calculate the credit quota for Vietcombank. So we at this time we not yet announce the official quota of the credit growth for this year. But we generally we also share the same view with the State Bank of Vietnam, that for this year the credit growth need to be more prudent versus the last year. So what we have in mind at the moment, maybe we think that this maybe the number should be less than the last year, and this for the base case scenario we are thinking of the 13% as the minimum, and the for this year we think that the deposit growth on the other hand would be we will manage to deposit growth more than the lending growth, credit growth, and the growth will be very much anyways depend on the state of the economy, and the actual growth can be higher depend on the variety of factors such as the whether the economy is robust, and more importantly whether our customer meet our underwriting standards. So we think that is the credit growth for this year for Vietcombank would range from the at least 13% to maybe as high as 20%, depend on the number of factors that I just mentioned. In terms of asset quality, we expect our NPL ratio would be on the same level of the last year, 2025, and our goal is to control the NPL a ratio of less than 1.5%. In terms of profitability, we expect our profit before tax growth will be similar to that of 2025, at least 5%. And if the economy is more robust, so we think that our profitability could be higher, maybe close to 10%. Please notice that all these numbers we just have in mind for now, because you know that it's in April, the coming April, we'll hold the AGM, annual general meetings, which all the targets will be approved at that AGM. Thank you.
Thank you very much. Now we're heading to discuss on our loan book. Mr. Hill, can you please share the credit drivers for Q4 2025?
Yeah, thanks for the question. So I think we already mentioned that in our presentation. We ended the year with growth of around 15.5% year to date. And in Q4, the credit growth was driven further by corporate and resilient growth from retail. For corporate, it advanced by around 14.1% year to date. And net increase in Q4 was about 21 trillion, which is roughly 20% of net increase in 12 months of 2025 of around 100 trillion. For breakdown of corporate loan by customer segmentation, FDI ended the quarters with growth of around 17% year to date, and focusing on sectors such as electronic products, animal raising, oil refinery, or textiles. For large corporate, we also saw strong disbursement from major projects, while mid-sized corporation loans accelerated in Q4 and ended the year with growth of over 20% year to date. And it was in further sectors such as trading, petrol, consumer product, or machinery. For individuals, it continued to be resilient from Q4 of 2024. And we ended the year with a growth of around 70% year to date. And net increase in Q4 was around 18 trillion, which is around 20% of net increase in 12 months of 2025. It has created momentum to lift NIM in coming quarters. In terms of breakdown for individual by its product types, mortgage loan was the strongest segment with growth of around 21% year to date, following by business loan with growth of around 9%. And lastly, consumption loan continued to be robust and ended the year with roughly 50% growth year to date. Thank you.
Thank you very much. Mr. Hong, we received questions that please share the outlook for 2026, including the credit quotas, credit growth targets, and sector to drive growth in 2026. Specifically, can you please provide your target growth for mortgage books, the disbursement plan for infrastructure project in 2026-27, and plan to expand the loan books to SME and household loans, if any? And also, can you please add your comments on the FDI sector in 2026?
As I mentioned earlier, we are waiting for the credit quota from the State Bank of Vietnam. And our base case scenarios of credit growth for this year is at least 13%. And the actual growth will be very much depend on the state of the economy. The growth could be higher if the economy is robust and our customer meet our underwriting standards. For the driver of the credit growth in 2026 this year, we expecting two key drivers of the last year, 2025, will continue to drive the credit growth in these years. For corporate loans, driver will come from the sectors such as the government prioritized industry and the key national projects such as the transportation, infrastructure, seaport, energy, and real estates. For the real estates, we are more selective and focus on the projects with the clearly legal process and from the reputable and big developers. More specifically, disbursement plan for the infrastructure projects in 2026 is around between 1 and 2% of total loans of the last quarter of the last years. And it very much depend on the progress of each project. For FDI clients, we think that is so far we waiting for the detail of the tariff negotiation between the Vietnam and the US. However, we have been monitoring this group of clients very closely from the April of the last years, where the US announced the tentative tariff. And so far, we have not seen any significant slowdown in the demand for the credit from this group of clients. For FDI clients of Vietcombank, our clients have been actively preparing all the counter action against the tariff, like diversifying their markets, negotiating to share the cost with the buyers. So as of now, we quite positive of the growth for this group of clients. And please note that all the biggest FDI clients in Vietnam are our customers. They are very resilient, and we think that is not expect no significant impact with this group of clients in the coming times. For retail, a driver come from two key products, which are mortgages and business loans. For the real estate market, we think that is still recovering with developers supplying new housing and apartment to the market. Demand for the mortgages will continue to grow in the coming months, particularly for the affordable and social housing segment. The demand will be partially offset by the recent adjustment of the lending rates, so we expect the mortgages growth will be slightly less than the average growth of the retail. Business for household loans growth will slightly higher given the positive outlook of the economy, and the consumption loans will continue the momentum thanks to our effort in promoting lending on the digital channels. Regarding SME, we expect will grow in line with the home book and maintain as a proportion to the total loans of around 6%. And that's it. Thank you.
Thank you very much. While we're discussing on the mortgage book, Mr. Hill, can you please share what are Vietcombank current mortgage rate across the key customer segments, and also in the context of higher mortgage rates and softer transaction liquidities in the real estate market? How does management view mortgage demand in 2026, and what is the implications could this have for Vietcombank loan growth and asset quality?
Thank you for the questions. So for mortgage, we offer customer two types of rate. One is floating rate, and the other is fixed rate. For now, the floating rate is around 9.9 to 10.9%. And for fixed rate, it is ranging from 9.6% to 13.9%. We also offer preferential rates to our priority customers and customer purchasing units for projects developed by our priority developers. Our current mortgage rates might affect demand of customer with investment purposes, but it does not affect that much to the demand of customer with living purposes, which is where most of our customers are. We see that their demand is quite high, particularly in the affordable segment, and as a result, it will not affect the loan growth for mortgage. In terms of asset qualities, as we have been very selective with our customers. So our customer at this moment have very healthy income and sufficient collaterals. So this current mortgages will not affect our NPL ratio or our asset quality. Thank you.
Thank you very much. According to your financial statement, the NPL ratio in 4Q is down significantly to 0.58%. Can you please clarify why you report the NPL ratios of 0.97%?
So why we report the number of 0.9% is we take into account of non-performing in terms of bond. So there was 0.5 is just the non-performing loans only, but the 0.9% including non-performing loans plus non-performing bonds.
Okay.
Thank you.
Thank you very much. Now heading to the asset qualities. Mr. Hill, can you please share your view on the NPL in recent quarters and also outlook for 2026? And what is your view on the impact of rising interest rates on asset quality?
So in recent quarters and throughout the last 5 years, our NPLs have remained broadly manageable. It was well under 1%. And our NPLs have been being steady low and always below the industry average, reflecting our consistently prudent credit underwriting and risk controls. In terms of the rising interest rate, for our bank, the decision of raising interest rate is calculated very carefully to make sure that it does not have material impact on our customers. And plus, the lending rate level at this moment is still considered low over the past decade. So we expect this lending rate level is broadly manageable for our customers. Looking forward, we will continue to maintain our prudent risk appetite, including prudent underwriting, early warning monitoring, and proactive provisionings, which means we expect our NPL to stay contained, supported by a more stable macro backdrop and a more cautious credit growth approach by the SBV. And as we mentioned earlier, we expect our NPL ratio will be on the same level of 2025, and our goal is to control NPL ratio less than 1.5%, which is similar to the target of 2025. Thank you.
Yeah. Also, can you please share details on the provision reversal in 2026 and what customers recorded in such reversal?
So in 2026, we recorded some reversal for customers we made during COVID. We cannot disclose the name, but I think in overall, I think it helps the provision for the bank, and it helps the bank to maintain a very quite low credit cost. Thank you.
Thank you very much. While we're on the NPL subject, can you share the targets for NPL provisions and bad debt collections in 2026? And also, what is the bank target LLCR for 2026? And also, what is the normal run rate for credit costs for 2026 also?
So our reserve coverage ratio stood at around 174%, which is among the highest, providing significant loss absorption buffer to facilitate faster write-offs if needed. And our coverage ratio has been on declining trends as our asset quality remains strong, supported by consistent credit underwriting standards. Looking ahead, we expect the coverage ratio to remain in the 150 to 200% range, and bad debt collection is expected to continue the momentum given the recovery of real estate market and the legalization of Resolution 42. In terms of the normal run rate for credit cost, so we expect that it will be similar to 2025 of around 0.2 to 0.3%. For a longer view, the normal credit cost, we are comfortable with around 0.2 to 0.5%, depending on our assessment of asset quality. Thank you.
Thank you very much. Heading to discuss on funding and liquidities. Mr. Hong, can you, given the elevated loan-to-deposit ratios across the banking sectors, how does management assess the outlook of Vietcombank funding positions and industry-wide interest rate trends in 2026? And can you please share your outlook for deposit rate in the first half of 2026? And also, given a further looking outlook, how much does the bank anticipate the 12-month deposit rate will increase by end of 2026 compared to end of 2025?
Thank you for the question. And from our observation, the core, the pure LDR has been maintaining over 100% at most banks since the beginning of the year, and has been ticking up throughout the last year, 2025. This is due to the strong credit recovery in the 2025, while deposits have not been able to catch up with this strong growth. However, the liquidity situation might vary across banks. For Vietcombank, thanks to our strong deposit franchise and prudent risk management, despite our strong credit growth in last year, we still maintain a comfortable pure LDR of less than 100% in the first half of the last year, and close to the 100% at the end of the year. This ratio is, lower than the market average. Therefore, we are able to attract funding to accommodate the strong balance sheet expansion while maintaining the lowest deposit rates in the market. Looking forward, we believe that the pressure is increasing in this year, 2026, and in fact, many banks, including ourselves, have raised deposit rates in the last few weeks of this year. As the system liquidity is getting tighter, we believe the trend may continue in the first half of this year, given the strong credit demand in line with the economic recovery, and also due to the seasonality impact of the Lunar New Year celebration, as Mr. Tang mentioned earlier. However, it might be difficult to give an estimation of the exact number, how much deposit rate will increase in towards the end of the years, given the various factors that might possibly impact interest rates decision of banks, like actual credit growth, exchange rate situation, actual economic growth. We will updating you on this in the maybe at the later upcoming earnings call. Thank you.
Thank you very much. Mr. Tang, can you please share what are the key levers that SPV can take to address the tight liquidity situations in Vietnam?
Okay, thank you very much for the questions. Actually, in 2025, the SPV already did a great job in terms of injecting liquidity into the banking system in time of need, and thereby stabilizes market interest rate, exchange rate, and enhance market confidence. So looking forward this year, 2026, I do think that SPV continue to rely on similar money market tools to support market liquidity, such as open market operations, which reference to issuing longer 10-year reverse repo, adjusting open market operation rate, and also use a number of foreign exchange tools such as for sales, foreign exchange, and swap. Besides, we would expect that there will be a more coordinated approach between State Bank of Vietnam and the Ministry of Finance. In particular, we expect that the Ministry of Finance will manage better the pace of issuing government bonds and the progress of disbursement of government spending in order to reduce the pressures on liquidity and thereby on the interest rates. And finally, I think that recently the Ministry of Finance will issue a policy which allows State Treasury to increase its term deposits at commercial banks from 50% to 60%. So actually, by these actions, quite a substantial amount of liquidity already injected into the market to reduce pressures on interest rates. Thank you.
Thank you very much. Heading to the NIM and interest rate topic, Mr. Hieu, what are Vietcombank current average lending rates across the key customer segment and also specifically in mortgage rates? And can you share your outlook on the mortgage rates in the upcoming time and also quarterly asset yield in 2026?
So this is a very specific question, and we will try to provide as much details as possible. In terms of our average lending yield, and as of Q4 2025, it is around 5.7% for the whole portfolio, with loan book mix quite balanced between corporate and retail book. And by tenor, we are having around 41% medium and long-term loans. In more details, corporate lending rates mostly vary by tenure, with short-term loans rates from 4 to 5%, while longer-term loans range from 6.5 to 7.5%, depending on customer profile and project details. And normally, we see FDI having lowest rate, given mostly in short terms and their good profile, and middle-sized companies having highest lending rates. For retail clients, lending rates depend on type products. Consumer loans yield is highest, with credit card, auto loans, and other consumption ranging from 7 to 15%. Mortgage rate might vary depending on the fixed period. For example, as end of 2025, 1 year fixed rate is around 7.5%. And after that, it will be benchmarked against the deposit rate with 3.5% to 4% markup. And that gives the long-term mortgage rate of 8.5 to 9.5%. And business loans are mostly short-term loans, so the rate is lower at around 6 to 6.5%. And SME also has similar rates. For outlook on mortgage rate, we expect it had been stay around the peak level, but again, this will be very much depend on the market. Number one, which mortgage rate other banks are charging, and number two, which deposit rate other banks are offering to their customers. For questions regarding
The outlook for mortgage rates in upcoming time.
For the market rate, yes. So again, it's very much depend on the market rate. And for the quarterly asset yields in 2026, again, we think it will be impossible to give such detailed estimations with the current trend of higher interest rate and our effort to shift to higher tenor loans. We expect asset yields to go up in 2026 and might be already reflect in first quarter results. Thank you.
Thank you. What helps with your asset yield, and how did you decrease the funding cost in Q4 2025 amid the rate hikes?
So our asset yield tick up in Q4 thanks to increasing proportion of medium and long-term loans since Q3, and also the recovery of retail loans in the second half. So on the other hand, we maintain low deposit rates with high CASA and only increased deposit rate in the last few weeks of December. So our Q4 cost of fund is slightly decreased. Thank you.
Thank you. Does the bank set any target on CASA ratio? And what is your outlook for quarterly cost of fund in 2026?
So we don't set fixed target for CASA. With our current deposit size and high CASA ratio, also with high term deposit rates, it would be very challenging to bring CASA to higher level. And what we are trying to do is to continuously increase our deposit balance and in the meantime maintain our current CASA ratio. And that means also expanding our CASA absolute volume. And that will be done by further engaging customer on digital channel, introducing new features, making on our digital bank app to become an everyday use financial tool for customers, not only to our banking services, but also to make payment, go shopping, booking online. Another important part of contributing to our CASA is our transaction banking services for corporate customers. We will continue to focus on delivering quality payment and advisory services, forex conversion, expanding to our relation with FDI companies to enhance our corporate CASAs. For the questions on quarterly cost of fund, there might be pressures given upward trajectory of deposit rate. So we expect our cost of fund to gradually go up in 2026. And yes, we expect Vietcombank to continue to have one of the lowest cost of funds in the market.
Thank you. Can you share the management view on industry NIM in 2026, given the rising interest rate? Specifically, could you please share your view on NIM of Vietcombank in 2026, and what are the measures to maintain or increase the NIM in the upcoming time?
So banking industry has seen NIM compression in 2025 due to low lending rate environment with rising interest rate. We think on the one hand that will be supportive for lending rate, but on the other hand, cost of fund will also increase and offset impact of higher lending rates. As a result, NIM might tick up, but not too much due to cost of fund pressures. For our firm, we started to see NIM tick up in the last quarters of 2025, and we expect further improvement in 2026 thanks to 3 points. Number one is the continued shift to longer term loans to support overall asset yield. Number 2 is to our effort to diversify fund mobilization and control cost of funds. And number 3 is maintaining our balance sheet optimization with high LDR to support NIM. Thank you.
Why the CIR ratio increased in 2025, and what is the trend in 2026 and also on the medium term? Do you have any initiatives in developing the fee-based services? And your NFI, excluding the banca, seems to be stagnant in the recent year. Can you please provide more insight on these issues? And do you still target to be the number one in terms of profit in 2026?
So this is a question has a lot of points, so I will try to address all of them first. Firstly, which is about our CAR. So again, I think we already mentioned in our presentation that the increase was due to the comparative staff cost in IT and data. And in the medium terms, we are still expecting to manage our CAR less than 35%. So in terms of another fee income, so right now we are focused on the digital bank, particularly in the e-banking services. So we focus on cross-border QR with more penetration, and also we want to focus on card services so that it can improve with improved domestic consumption and resilient trade finance. So in terms of your last questions for the profit before tax, and I think at this moment, given the very rapid growth, I think our view is that we want to be balanced between profit and asset quality and also sustainable growth. Thank you.
Thank you very much. Mr. Hung, can you please provide an update on the progress and expected timeline of the private placement? And are there any changes in target investors, the deal size, or expected pricings compared to the earlier guidance? Also, can you share on the dividend plan?
According to our approved plan, the private placement is scheduled to be executed in this year, 2026, and in line with that, the investor average is still ongoing, and so far we think that is giving positive signals. We shall follow with the current approved plan regarding the target investors' deal size and the pricing mechanism. Vietcombank has a plan to issue a stock dividend this year, and this plan is now submitting for approval from authority, and we shall update you later on when there is more concrete information.
Thank you. We received a question on the impact of Resolution 79 to Vietcombank management. Can you please share, and also the strategy of Vietcombank in the medium term 2026 to 2030 period?
We think that is Resolution 79 is a very important resolution, and then it will help to enhance the overall effectiveness of our economy, and Resolution 79 emphasizes the role of the larger SOEs, including Vietcombank, in spearheading capital flows and investment, and it provides a clearer and more enabling policy framework for state-owned commercial banks, supporting a stronger balance between commercial efficiency and the policy responsibilities. And we think that is make us more interested with the going forward with our ESG policies, and for the going forward for the periods of the 2026 until 2030, we see key impacts on Vietcombank management and strategy. It will strengthen our governance and accountability with a clearer mechanism for the oversight and performance discipline. On the other hand, it also provides a guidance for better alignment with the national priority, reinforcing our role and mission in supporting economic growth, key sectors, and long-term financial stability. Thank you.
Thank you very much. Mr. Hill, given the high coverage ratio, does Vietcombank expect potential provision write-backs in transition to IRB under the Circular 14, or will the bank continue to be conservative? What is the timeline for IRB transition, and also will the IFRS 9 will be implemented concurrently?
So as one of the most prudent banks in terms of risk management, we have been very prudent in making provisions, which result in a coverage of more than 170% as of last year. The current coverage is within our range, so we will continue to maintain the coverage at this level. At the same time, we have been quite actively preparing for our transition to Basel III, and as communicated in our previous call, we are targeting to adopt IRB approach by 2029. The timeline is that 2026 is for internal preparation, 2027 and 2028 is for pilotings, and 2029 is for getting approval from SBV. In terms of IFRS 9, we have completed our preparation for IFRS 9. So once Ministry of Finance announced the timeline for public disclosures of IFRS 9, we will disclose to public our IFRS 9 report. Thank you.
Thank you. Mr. Hung, can you please share the progress of the Zero Dong Bank restructuring and how much loans were transferred in 2025 and the expected amount to be transferred in 2026?
So after you know that we received the bank in October of 2024, and since then we have been restructuring the bank in accordance with the plan approved by the government, and rebranded the banks, and now it's called VCB Neo. VCB Neo is now operating business as usual, and the restructuring is on track. And at the end of the last year, 2025, the last year is the first year of the restructuring, and with our assistance, BCB Neo already made a profit, approximately 1,900 billion. And for the amount of loan transferred to BCB Neo, this information is classified as confidential, so we are not able to disclose at this point. However, please keep in mind that the loan transfer to VCB Neo is a one-off only, and we do not plan to transfer any loan further to VCB Neo in this year 2026 and the coming years, except for the maybe some partial amount of the already transferred. But if this amount is going due, so we may to replace some part of that to maintain the size of the transfer loans. Thank you.
Thank you. Mr. Hill, could you share the regulatory LDR and also the SML ratio as of end of 2025?
So the regulatory LDR as of last year was around 82%, and the special mention loan, short-term loans for medium and long, short-term funding for medium and long-term loans ratio was around 23% as of last year. Thank you.
Yeah. Can you share what is your comfortable levels of CET1 ratio and the dividend payout ratio targets? What is the level that you are targeting in long term?
So we aim to maintain our CAR at around 12 to 14%. So CET1 will be around 11% level. For dividend payout ratios, so the final decision will be subject to the central bank and the shareholders. But we might expect somewhat similar to our most recent cash dividend in 2025 with payout ratio of around 10%. Thank you.
Thank you very much. Vietcombank recently issued 3,000 billion Vietnam Dong sustainability-linked bonds. Can you please share the progress of disbursement of your green and sustainable linked bonds? And what are the overall sustainability strategy of Vietcombank?
Yeah, thanks for the questions. So Vietcombank has been implementing the disbursement of around 2,000 billion sustainability-linked bond in accordance with the approved plan. And as of now, more than 50% of the proceeds have been allocated to eligible projects. And we expect to continue allocating the remaining funds during the first quarters of this year to projects that fully meet our criteria and sustainability objectives. The allocated proceeds are being deployed across a diversified portfolios of sectors, including social housing, renewable energies, and sustainable transportation. In terms of our sustainability strategies, it is anchored in integrating environmental, social, and governance consideration into our core banking activities and long-term business strategies. We aim to balance sustainable economic growth with positive environmental and social impacts while ensuring prudent governance and risk management. So there are some key priorities here. Number one is to expanding green and sustainable finance products, including green loans, sustainability-linked instruments, and thematic bond insurance. Number two is prioritizing funding for projects with positive environmental and social impacts, aligned with Vietnam's sustainable development goals and green growth agendas. Number three is strengthening ESG risk management by embedding environmental and social risk consideration into credit appraisal, portfolio management, and internal risk governance frameworks. And lastly, is enhancing transparency and disclosures in line with international best practices and reporting standards to improve accountability and stakeholders' confidence. Thank you.
Thank you. Mr. Hong, we received a question that Vietcombank have a much lower deposit growth compared to other state-owned banks in the market. Can you share your measurements on how can you take to increase the funding and also support growth?
So in last year we recorded deposit growth of 10.4%, and the industry with this number is 14%, and remain lower. So we remain lower than that of the state-owned banks in Vietnam. This trend reflects a strong increase in the credit demand amidst the robust economic growth. But it also is our deliberate strategy in optimizing capital efficiency while strictly comply with the LDR ratio regulated by the State Bank of Vietnam. In fact, Vietcombank continue to play a leading role as a liquidity provider in the market, and our LDR is still the lowest among the big banks in Vietnam. Vietcombank will continue with the role as a liquidity provider and diversify the funding base and the strong client relationship.
Yeah, thank you. Mr. Hill, did Vietcombank utilize the mandatory reserve reductions given the bank that participate in restructuring weak banks? And how much the cost of funds saver should we expect it? Do Vietcombank have plans to launch an auto earnings like other banks?
So in terms of mandatory reserve reduction given for bank participating in the restructuring weak bank, we are eligible for these policies and is waiting for approval from the SBV in terms of when we can apply this policy. This policy would have positive impact on the bank's performance, and it allows the bank to allocate the extra fund into higher yield assets. However, the impact is moderate due to, number one, the reserve requirement is relatively small compared with our total asset size. Number two, our ultimate goal is to maintain our liquidity position. So we'll try to balance between optimizing the extra fund and managing our risk, our liquidity risk, given the high liquidity in the market. In terms of our auto earnings, we have launched a new product called Certificate of Deposit, offering our retail clients on our digital app. With this, customer can buy and sell this product with our security arms, which is VCBS, to optimize their savings and in a convenient manners. We also developing an investment product for retail customers, and with this product, customer can flexibly deposit and withdraw their term deposits. Thank you.
And what sector do you think are posing risk in 2026 and you're concerned most about?
So at Vietcombank, we monitor the health of all sectors in the economy very closely to give the recommendation to our sale on which sector they should focus on. We classify sectors into 3 different categories. Number 1 is growth, number 2 is maintain, and number 3 is to reduce. So in the past, we have sectors classified as reduction, particularly during COVID. But at this moment, given the prospects of the economy, we have no sectors classified as reductions. So we do not have any big concern at this moment in terms of risks for sector level. In terms of managing risk on customer level, we have been very selective when choosing our customers, with some principles such as customers must have sound governance, sound financial capacities, feasible business plan, and most importantly, have enough cash flow to pay back debt. Thank you.
Thank you. We are coming closer towards the end of the earnings call. If there are no further questions, I would like to invite Mr. Hong Do to wrap up the call and sharing the closing remarks. Thank you.
So there are no further questions, and we also running out of time. I would like to conclude our earnings call today. Despite emerging global challenges, Vietnam economy continues to show signs of resilience and recovery. We believe Vietcombank is well positioned to sustain its growth, closely monitor market disciplines and developments, and adapt swiftly to the changing conditions, unlocking further business opportunity in 2026. Looking ahead, Vietnam policy direction continue to focus on sustaining development, improving macroeconomic stability, and increasing investment and productivity. Against this context, Vietcombank remains firmly committed to sustainable development and long-term value creation. As a Vietnam leading bank, we will continue to prioritize the interests of our shareholders and investors in our strategy through transparency, consistent execution, and a continued focus on resilience and long-term returns, while positively contribute to Vietnam's overall economic development. We sincerely appreciate the continued interest and trust in Vietcombank. If you have any further questions, please contact our IR team. We look forward to engaging with you again in our next earnings call. Thank you and goodbye.